Palantir, it's the big time. Palantir earnings are 24 hours away from me releasing this video. We're going to discuss in this video what to expect from these earnings, what I'm expecting, what's going to happen with the stock price in my opinion. Are we headed back to sub $20? Are we headed to, let's call it, $30 after this earnings? So we'll speak about that in this video here today. Obviously the stock's about 24 bucks as of right now. And we'll talk about my plans with this stock after earnings. Am I planning on buying more shares, selling my shares, anything like that? In the public count, I'm going in with 5,555 shares of Palantir stock. And there's 6 more stocks we're going to speak about in today, although Palantir is the main course of today's video. We're also going to talk about Celsius earnings, which are Tuesday, Fubo earnings, which are Tuesday, Supermicro, Wynn Resorts, which are Tuesday. Then Wednesday we have Shopify, and Thursday we have E.l.f. So we'll speak about those companies, if I'm expecting those companies to beat their earnings, miss their earnings, well, you know, those sorts of things, if I'm looking to buy those stocks, all that sort of stuff, okay? By the way, pin comment down there today, I'll put my Twitch channel, and the reason I'm putting that is because I'm going to be live streaming Palantir's earnings on my Twitch channel. If you want to know why I don't do it on YouTube, is because sometimes I get a little vulgar on those live streams. It doesn't usually happen on YouTube, and I don't want to mess up my Louis Vuitton ads, my Apple ads, my $250,000 a year. No, okay? And then link in the description today will be for 1000X access, as well as if you're looking to join my private group and you're looking to take your investing up to a higher level than where you're at. You're looking to take investing more serious, okay? Alrighty, so first place I want to start out here in regards to Palantir is it's been a wild ride, right, since IPO. I mean, it's been a hell of a ride in regards to the stock. It started in the hype cycle back in 2021, right, of, you know, everything to the moon, very, very exciting times. And then right after the hype cycle, we had the crash cycle, right, which was 2022. Interest rates got, you know, obviously the Fed raised interest rates at a very substantial clip. Inflation hit everybody super hard, and Palantir stock absolutely collapsed, right? It went from a $30 plus stock all the way to the lows. It was down to about $6 in the lows. Absolutely incredible crash, right? And since that time, the stock has pretty much been up and away. And every single dip in regards to Palantir along this way up has been nothing but a buying opportunity, right? And Alex Karp, the visionary leader of this company, it went from a lot of people were not very sure about him in the beginning to then by 2022, a lot of people were looking at him as a villain, right? It was like, man, he said it was supposed to be 30% growth. We're not doing 30% growth. This guy doesn't know what he's doing. The stock's $6, right? And a lot of people didn't like him. And now fast forward to 2024, I think a lot of people look at him like a genius. And the reason they look at him like a genius now, right, is one, the stock's all of a sudden doing amazing, right? And the second, if you look at a lot of his predictions that he made a year ago, 2 years ago, 3 years ago, a lot of those have actually come to fruition in regards to what he sees for not only Palantir, but what he sees in regards to the global economic environment, the geopolitical situations, countries getting in conflicts with other countries, like everything he kind of laid out many years ago is all actually playing out right in front of us today. And he spoke about a more dangerous world and those sorts of things that we were going into, and so far it's been 100% accurate. And so it's very interesting. So that's why a lot of people are looking at him like a genius. They're like, oh my gosh, all these things he was talking about, it all actually ended up coming true in the end, right? Now, if we look back at the last earnings for this company, they had roughly in line EPS, and then they did beat in regards to the revenue side. Okay, they beat by about $17 million. So in terms of this quarter they're about to report, they're expected to do 8 cents. So whenever you're looking at a company's earnings, you always want to look at what they're expected to do this quarter they're about to report, as well as the next quarter, because usually companies give guidance, and so it's not just a game of what were the numbers this quarter, it's what's the guidance like? Are you going to beat numbers next quarter, right? And so analysts are at 8 cents on average and 8 cents on average for the next quarter, right? Which is roughly in line with what they did last quarter. And then as far as revenue goes for this company, analysts are at 22% and about 22% as well for the following quarter, okay? For this June quarter, it's about to report it as far, and in terms of the guidance. So do I expect them to beat or miss these estimates here? I expect them to beat double beat here. And when I say double beat, I'm not just talking, it's actually a quadruple beat. I believe they're going to beat in terms of earnings per share. They're going to beat in terms of revenue for this past quarter. But I also believe they're going to guide, if they give any guidance around EPS, it's going to be higher than where they're at right now, 8 cents, where analysts are at, right? And then as far as revenue goes, I think they're going to beat as far as the guidance as well. So they're actually going to do what I call a quadruple beat here, in my personal opinion, okay? Now, I don't look for them to blow the top off. And when I say blow the top off, what I'm talking about is I'm not expecting like this to be like oh, they 8 cents and they come in with 16 cents. No. Okay, I'm expecting like, oh, analysts are at 8 cents, they come in with 9 cents, 10 cents, something like that for EPS. In terms of revenue, I'm not looking for them to, instead of 22%, they report 32% revenue growth. No, that's going to be phenomenal. We'll talk about if that actually happens, like what's going to happen with the stock price. But I'm expecting like 24%, maybe 25% revenue growth, and the same exact thing for next quarter, 24, maybe 25% revenue growth. Now, what gives me the confidence to believe they're going to beat on not only earnings per share, but revenue, okay? There's two things specific, I would say. One is the business model has fundamentally changed for Palantir. We all know that. AIP has changed its business model forever, and obviously the excitement around AI and companies at the end of the day looking for real AI products and how do you use your data that you have as a company to make more money, save you more money, cost efficiencies, all those sorts of things, right? And you come to Palantir for something like that, that's great. But the second reason, and I think this one's, maybe a little more complicated than that because we all know AI's definitely got a very exciting hype cycle right now and Palantir's going to benefit from that. The second thing's a little more hidden here. Check this out, okay? Now we're playing the game of Wall Street. Here's the deal, okay? This quarter they're about to report, okay? Last year's comp is a very easy comp. Last year in the same quarter, they only had 12.7% revenue growth. Only 12.7%. The number was really low. It was really bad, and that was actually the official bottoming out of Palantir's business model. Now, the stock price had already bottomed well before that. The stock price had already bottomed about 9 months before that. And you got to keep in mind, in regards to stock market, usually stocks will bottom 6 to 9 months before their business model actually bottoms. And so when you look at something like Palantir, their business model bottomed right there, okay? So now we're comping against this easy number versus the company's already been doing 20% type revenue recently, right? And that was against a way harder comp, like a 17.6% growth there, right? This quarter grew about 20%. That was against a 17.5% revenue growth number. So the comp's pretty easy here. And obviously you compound that with the excitement in the AI hype cycle and, Palantir's business model really starting to build. And all this excitement and all these customers, AIP, looking at Palantir, right? All those start coming in forms of deals, right? And so that's another thing to factor in here. Now, as far as next quarter, is another easy comp. They didn't even grow 17% in that same quarter last year. So that's why I look at this and I'm like, yeah, these numbers are beatable across the board. And I could see Palantir coming in with a quadruple beat here, okay? Now, in regards to stock and the stock price, I like the setup. I really like the setup. Here's the deal. The stock's down about 4% in the past month, right? So we're not going into some crazy hype cycle in regards to these earnings, right? The stocks that scare me the most is if one of my stocks is going into an earnings and everybody's excited about it, everybody's hyped on it, everybody's buying it up, you see the stock up 10, 20, 30% on a 1 month going into those earnings, that freaks me out because then it starts to feel like there's only downside potential here because it seems like everybody's hyped, everybody's bullish on the stock, right? And in regards to Palantir, that's just not the case. Down 4% in the past month. There's been a huge kind of alleviation of excitement and hype in regards to this, right? And I'll put it to you kind of like this. I always kind of give this analogy out there if you ever watched my channel before in regards to this, right? If you're a straight A student and you don't come in with a straight A, right? You come in with a B or a C grade, your parent starts looking at you and like, what's going on? Like, well, why are you struggling in school? Like, you're a straight A student and you got a B, you got a C, right? That's tough. That's like if your stock price is soaring right into an earnings, right? If you don't come in with that A plus earnings report, everybody's looking at you like, what happened, right? Now, if you go into an earnings report and you're like a C student, right, and then you come in with an A or a B grade, it's like your parent starts clapping for you. They want to take you out for dinner. Like, wow, this is impressive. You're doing great, Johnny, in school. That's a company going into earnings. If their stock price isn't performing great and there's like, very meh performance going into the earnings, which is what Palantir is, if all of a sudden they come in with a great report card here, boom, you're going to see the stock boom and everybody's going to want in this thing left and right, right? Now, the valuation going into the earnings is not ideal. Looking at about a 70, looking at 1000xstocks.com here, looking at about a 74 forward P, 2 year out forward P is, let's call it a little under 60. That's not ideal, but something to keep in mind here in regards to Palantir is this, right? So I ran some numbers here in regards to Palantir, having grown about 25% revenues on average per year from 2025 to 2028, right? And then net income, they're at the infant stage of profitability, like they just started getting profitability really in the past year. So their net income should go up dramatically faster at a clip than their revenues over the next 4 or 5 years, right? So they've been doing about 50% net income growth, which is, I think, a pretty realistic number considering how early days this company is with its profit cycle, right? About 50% net income growth on average from 2025 to 2028, right? Which, if they do something like that, you got to understand a company like this in this more of a SaaS space, right? With that sort of growth rates, you're going to command likely a minimum of a 35 PE, but you're probably looking closer to like a 50, right? And so if you look at it in the short term, like let's say 2025, you're kind of like, I don't know, the stock kind of feels like a ripoff. It's $24 stock, probably should be $15 to $22, somewhere in there, right? It kind of looks like a rip, but you got to understand people are paying up for future growth in regards to something like Palantir, because then you look out to like a 2028, right? And the company should be doing $3 billion plus in net income. They should be doing, $6 to $7 billion of revenue at that particular time, right? And that's assuming they don't have the revenues go crazy and back to Alex Karp's number of 30% plus. And you're looking at like a $50 to $75 stock in that sort of situation likely, right? And so that's some food for thought in regards to that. And keep in mind, if you're growing 25% top line, 50% bottom line, you're going to command actually a much higher PE than that. You're going to probably command a PE somewhere in the 80 to 100 range if you're growing at those sorts of clips. So I kind of went a little more conservative here. But that's where you look at Palantir and you're like, if you're looking at only the 2024, 2025, you're like, oh, this stock's kind of a ripoff. It's not a good deal. And then if you look a little bit deeper, you look a few years out, and all of a sudden you're like, oh, no, this stock's actually a great deal. This is like a 2x, 3x type opportunity just over the next few years, not even talking about the next 10, 20 years, right? Now, where's the stock price going here, okay? So here's kind of my opinion on stock price reactions based upon if certain things happen in regards to their numbers. So let's say they have roughly in-line numbers and an in-line guidance. I think we'll kind of be stuck in the $22 to $25 range, which is roughly where we're at right now. We're like $24 on the stock. So yeah, that would be, because here's the deal. That wouldn't be enough to discourage the bulls, but that also wouldn't be enough to really get the bulls very excited, right? Bulls want to see beats here. They want to see a beat on numbers. They want to see a beat on guidance. They want to feel like things are even better than analysts expect, right? And also you want Wall Street to feel like, oh, wow, things are even better than analysts expect. So yeah, if we come in inline numbers and inline guidance, $22 to $25 kind of where we're stuck at in the short term. Now, let's say the company misses numbers and or misses guidance. Oh boy, okay. In that sort of situation, we'd go down to like $18 to $20 in that sort of situation. And the reason being is a lot of traders would move out of this. A lot of momentum traders, and there's already been a good amount that have moved out, but you would have a lot more move out. Also, you would have some longs get freaked out by this. I mean, at the end of the day, like no one's expecting, I don't think, Palantir to miss numbers and miss guidance. It's certainly not me, and I don't think probably anybody that's bullish on this company is expecting the company to miss numbers and miss guidance. So given the AIP growth that this company should be having, and given what's going on with Foundry, given what's going on with the government side of the business, which we're seeing big contract after big contract, if they missed, man, yeah, we're probably going down to $18 to $20 range in that sort of situation. That would be kind of shocking, to be honest. No, if things play out my expectations where they come in with beats, they're not like crazy, like, wow, this is insane beats, but they're like beats across the board, like beats as far as revenue, EPS, guidance goes, then we're probably going up to like $25 to $28, and we'll kind of chill there for a bit. Now, if the circumstance happens where there's insane beat, and let's say the company comes in with a 30% plus revenue growth number, you'll see the stock skyrocket to $30 plus. Like that. It will happen quick, because no one's really expecting that. Even the most bullish bulls in regards to Palantir, even somebody like myself that's very bullish on this company, I am not expecting this company to ever get back to 30% plus revenue growth, right? And so if they do that, this stock's going to take off like a rocket ship. Absolutely, right? I think pretty much every single bull has given up on the 30% plus revenue growth number. We're all kind of in the 20% range now. It's just a question, are you more toward 20, you're more toward 25, more toward 27, 28, right? But everybody's given up on 30. So if all of a sudden you had 30 be out there, either in terms of they report on this quarter or next quarter's guides, like a 30% now, oh my gosh. You want to talk about a hype cycle starting in Palantir, it would take off like a rocket ship in that sort of situation, because no one's expecting that, okay? So the likely probability is we're kind of going to hang around this range that Palantir's at. But in the extraordinary circumstances, call it the under 10% probability of either they miss numbers bad or miss numbers at all, or they have this insane beat. That's when you'll get some insane moves. And that's why we're talking about such a huge kind of divergence here between like $18 kind of worst case scenario and $30 on the high end, right? But those are, expect more to like the $25, $28 in my opinion after earnings. So now, me personally, I'm holding the stock, right? And I'll be buying the stock. If I like the numbers and the stock goes down for any reason, I'll buy more in the stock. And obviously, as somebody that was buying the stock back at $7, $8, $9 a share, and my cost basis is insanely low on this one. What is my cost basis on Palantir? They don't show my cost basis here. Come on, Fidelity. Well, they show my cost basis total, $49,000. I believe my cost basis, you could run the math on it. I believe it's under $10 in the public account, right? So from that perspective, it's very difficult to get me to buy the stock at 20 plus. But with that being said, if I like these numbers, I'll buy it. Like, the bottom line is I should have never got Palantir stock at $7, $8, $9 a share. That was just silly. That was just the market being very silly in regards to all these tech stocks. And we'll likely never ever see pricing like that again, right? That was also a situation where Meta went under 100. Like, there was stupid stuff happening in the market, right? It was completely out of control. And, but bottom line is, if I like the numbers, I'll buy more shares, okay? Now, what about call options, okay? So, all right. I'm a reformed addict, but there was a time in my life when I loved to play options. Yes, there was. If you took me back there to those gambling Jeremy days, okay, what would I be looking at for something like a Palantir? 24 strikes, pay $2 for them, 26 break even, 2x of money, $28 and above, right? And so now, if the stock ran big on that Tuesday, right, after the earnings came out, I would move out of the position completely. I wouldn't want to hold that for the remainder of the week. And I would be willing to sacrifice any potential gains if the stock did keep running for the remainder of the week. And the reason being is the market, one, is very volatile right now. You could easily lose those gains. Two, the market maker might want to crush all the people that will make crazy money by Friday. And so you could potentially lose a bunch of gains. So let's say the stock blasted higher to, let's say, 28.50, right? Okay. By the end of the week, maybe the stock closed at 27, 26.50, and it loses gains along the way. You never know. Like, I see this happen all the time in regards to the market. So if you took me back there to the gambling Jeremy days, I'd be looking at that, baby. But listen, instead of gambling like that, I got a better idea. Buy as many Wynn shares as you possibly can under $80, okay? Then you have a reason to come to my city, Vegas, and you can stay at the Wynn, eat the finest restaurants, go to the finest clubs and lounges, and gamble there and play some craps, okay? It might be a little more fun. And if you want to have some more fun, you can go to the Planet. Oh, baby, you can go to the Planet. It's busy. It's getting busy again. Ooh, a lot of big changes there. I might talk about that soon. Get yourself some Jack Jackson. Now, in regards to Wynn, this is just one of many stocks reporting earnings this week. And we got to talk about Celsius, Fubo, Shopify, all these companies. What am I expecting? Let's start with Wynn since we're on the subject. So Wynn is expected to 31% EPS, have 31% EPS growth for this quarter they're about to report, and then 20% for next quarter, and then revenue of 9% growth, and then 6% growth for the next quarter, okay? I do think those are beatable numbers for Wynn overall, and the reason being is Macau is very, very strong. If you look at their latest numbers as far as GGR in Macau in general, it was up 11.6% on a year-over-year basis. And so far this year in general, numbers are up almost 37%, okay? So we're looking really good in terms of Macau. Vegas business continues to be strong. There's rumors about F1 business being weaker than it was last year. And that's fine. Like, that was a little out of control. So Wynn's looking, I would say, pretty good, but this is one I want to buy as many shares as possible, okay? Celsius Beverage, whoo, baby, down 55% in 11 weeks. Oh my gosh, like, that's insane, right? When you see that dramatic of a move in that short amount of time, you've got to assume somebody knows something. You've got to assume somebody knows something. And I'm just going to be honest with you guys, they do know something. There's no doubt Wall Street knows in regards to Celsius what's going on here. And you know how they know? Because they get the basically the channel data from a company like Nielsen, right? So they can see how many times barcodes are being scanned at different stores and things like that. And so they're able to kind of get the details on how well sell-through is or is not for Celsius overall. And from everything I've heard is it's not super great in regards to the last, couple months in regards to Celsius sales. It doesn't mean they're like falling off a cliff. It just means like they look like they're not going to be able to hit the sorts of numbers they need to hit in terms of growth, okay? So my guess is, in regards to Celsius, no one really cares about EPS yet for this company. People will start caring about EPS really for Celsius like 2026 and beyond, but really for this year and next year, people don't care about EPS. So we don't even need to talk about that. That's honestly irrelevant. If they come out with a beat, no one cares about that. All everybody cares about right now is market share, and all everybody cares about right now is revenue. So in terms of what analysts are at now, keep in mind they've been bringing down their numbers. We'll look at that in just a moment. They're at about just over 20% revenue growth expected for this quarter they're about to report, and then 19% next quarter. My guess is they miss on at least one of those numbers, if not both those numbers. Okay, that's my guess in regards to this, based upon kind of what Wall Street's doing to the stock right now. Now, additionally, this shows you EPS revisions, and it's not good. Okay. Analysts keep bringing down their earnings per share estimates for the company, but even worse, revenue. This is no bueno. Analysts keep bringing down their estimates. Look at the 6-month trend, 3-month trend, 1-month trend in regards to Celsius. They keep bringing down numbers. So they're expecting this company to not put up good numbers here. So for Celsius, the bottom line is, I think the long-term story for Celsius is still intact. Like I've done a lot of study on this company for the past month. Because of this huge drop, it's gotten my interest of like, what's going on here with Celsius? To me, the long-term story looks like it's still there, but the short-term story is no doubt muddy, okay? So, I don't know, like if I like the earnings and I like the conference call and this stock goes to the 30-something, I'll start a position in it. I'll have no problem with that. It won't be like a huge position for me, but I wouldn't mind owning this stock overall. So we got a pretty extraordinary situation going on here in regards to Celsius. And it is possible maybe it bottoms before these earnings come out, right? And then next thing you know, it's $55, $60 after earnings. That's always a potential. Fubo TV, the streaming company. So what am I expecting here? This is a spec stock I own, right? EPS, I think, is a complete wild card. And the reason I don't have a strong feeling on EPS is because I don't know what the legal expenses are looking like. Because right now they're going after Warner Brothers, they're going after Fox, and they're going after ESPN right now. And so I don't know, I don't know if we're talking like that's going to be $1 million in legal expense out of pocket for Fubo per quarter, or I don't know if we're talking about multi-millions. I don't know. Like, it's just a complete wild card right now. So therefore, I can't really make judgments on EPS. We'll get a lot more clarity here this week, though, when the earnings come out. Now, as far as revenue goes, I feel pretty confident here. 17% revenue growth expected for this quarter, and then 13.5% roughly for next quarter. That definitely looks beatable for this company. They've been growing at 20-30% clips for quite a while. So, and in regards to Fubo, it's a very attractive spec stock, because when I think about a spec stock, it's got to be a stock like there's a potential to lose it all, right? But it's got to have like that 10x plus upside. And if I look at Fubo, like this is one of those stocks that's like it's either going to zero or it's probably going to, $10, $15, $20 a share over the next, let's just call it 2 years, right? And so Fubo is quite an opportunity here, and the reason is, look at what's going on with the profit measures for this company. Gross profit, this is on a trailing 12-month basis, so it gives you a good glimpse of what's actually going on in the reality, rather than just looking at a quarter-over-quarter basis or something like that, because sometimes numbers can move around dramatically. Trailing 12-month basis, you can see much more in detail what's actually going on with the business model. And if we look here, the gross profit on a trailing 12-month basis went from negative 41 mil to then negative 14 mil to plus 23 mil to plus 49 mil to plus 86 mil to a plus 110 mil. So when I look at Fubo, we've seen a stock price go down and down and down, but we've seen the gross profit get better and better and better. And look at the bottom line. This is on also a trailing 12-month quarterly basis, right? And look at $561 million loss to 504 to 438 to 369 to 287 to 259. So if this trend continues, guess what's about to peak up here? To actual positive net income. And from being a money-losing company, a money-making company, then that takes bankruptcy off the risk. Once you take bankruptcy off the risk, let's say we could take bankruptcy out of the risk in regards to Fubo, the stock goes to $3 to $5 range immediately, right? if you could take that out. No different than that happened with Honest. Honest went from people were scared about bankruptcy to all of a sudden it got taken out of that. Balance sheet got in a great place. Income statement got in a much better place now. And although it's not like Honest is making a ton of money, it's just like they went from, oh, they're a bankruptcy candidate to not a bankruptcy candidate. And look at that stock. Ever since then, it's been kind of the $3 to $5 range. Same exact thing will happen with Fubo. If they can take this company from being we're worried about bankruptcy to, oh no, they're in a good position, they're not going bankrupt, it's just a question of how big the company will be, you're going to go to $3 to $5 like within months. So that's a thing to kind of factor in here, but they got to continue this trend of net income, of gross profit going up for this company if we're going to talk about taking BK off the whole situation here. Now, Supermicro is also reporting this week. Stock was down 7% on Friday. Stock got all the way up to $1,100+, and now it's down to $624. Stock's up 3,300% in the past 5 years. This is not a stock I track heavily, but I want to show you guys something I did think is important, because you see a stock up 3,000+% over 5 years, and you're like, and much of it's come over the past 2 years, and you're like, this has to be some overvalued, insane, like valuation type stock, right? What if I told you it's not at all? Check this out. Supermicro, forward P's 20 on the stock. You're going to be flipping my flapjacks, looking at 1000xstocks.com. 2-year out forward P 14. This is taking analyst estimates. Like, come on, man. That's way lower than AMD. That's way lower than NVIDIA. And so you look at Supermicro stock price and you're like, this valuation has to be insane. And then you look at the numbers and you're like, no, this doesn't look crazy. Look at the EPS estimates that they're talking about here. Look at the revenue estimates. This is not some insane overvalued stock, in my personal opinion. This actually looks rather attractive. I got to do more study on this company to get up to a higher level, but based upon the raw data I'm seeing here, it's not like it's some crazy valuation stock, right? Like if I was to go buy puts on it, I wouldn't, just to be quite frank. Shopify, they're reporting earnings this week. Stock's down about 29% this year. I hope it goes down. I really do. This is a stock I want to build as big of a position in as I possibly can over this next 6 to 12 months. So this is definitely one I'm rooting to go down, although I already have a position started in this one. It's like, compared to what I want to own in this stock, it's like nothing, basically. So I hope this one goes down. With that being said, I'm not so confident. And the reason being is, first off, this company grows 20% plus quarter in and quarter out. So the fact that they have less than a 20% growth number expected for this upcoming quarter, I don't know about that. I think there's pretty high. I'd be shocked if they grow less than 20%, right? And then next quarter, analysts are about 21%. Yeah, that's definitely a doable number. Now, also keep in mind, they sold off their logistics business around May or June of last year. So which means in that logistics business, it was kind of from my understanding, a money-losing business for them, but it brought in a bunch of revenue. And so they've had a comp against those numbers for the past year. That's about to roll off very soon here. And so keep in mind, Shopify's growth rates you've been seeing for really the past year, they would be way higher. They would be way higher if it wasn't for them selling off that logistics business, okay? And so now they don't have to comp against that. So if anything, you might see an actual revenue acceleration over the next few quarters here. Now, also that gives me confidence that they could beat these EPS estimates as well, because when I look out there and I see that no longer having the logistics business, right? From my understanding, there was a money loser, and also the revenue being in a much better place. They've let go of a decent chunk of employees. I'm looking and I'm like, I think EPS could definitely come in with beats. And maybe they come in with 30 or 40 cents of EPS and kind of shock everybody, and everybody's like, whoa, like Shopify is going to be way more profitable than we thought it was going to be, right? So that's kind of what I'm thinking here. So I want the stock to go down, but I'm not very confident it's going to go down, just to be quite frank with you guys. E.l.f. on a shelf is reporting earnings this week, right? It's my love. It's the best stock in the history of the public count in terms of percentage gain. 2,000+% gainer, right? Extraordinary. And I'm in love with this stock, right? But you know what's happening with E.l.f. right now? The same exact thing is happening to E.l.f. right now that happens every flippin' flapjacking quarter for this company. Everybody gets freaked out going into the earnings and they all de-risk out of the stock and they don't want to own it. And if you look, the stock is down 18+% just in the past month. This happens every time. It almost never fails in regards to this. Everybody gets scared. E.l.f.'s not going to hit numbers. They're not going to be able to hit these numbers. Got to move out of this stock, right? And I understand, like, it makes sense because E.l.f. trades at richer valuation. So if all of a sudden they miss on a growth rate or something like that, you could see a massive down move. So every single earning, people get freaked out, it seems like, going into these earnings, right? And then they end up being wrong in the end for even being scared, but it happens, right? Now, if we look, I'm looking at their numbers here. We'll start with revenue. It is very tough numbers to beat. I'm going to be honest with you guys. I mean, analysts are expecting 40% plus revenue growth. They're expecting 35% plus revenue growth the following quarter. EPS is definitely beatable numbers there. I definitely think those are beatable numbers. I think analysts are too bearish in regards to EPS numbers, but honestly, that doesn't really matter so much. This is kind of like a Celsius situation where people don't really care about earnings per share that much yet for this company. Talk to folks in 2026 and beyond, and E.l.f.'s going to be much more of an EPS story. But for right now, people really care about market share and revenue in regards to this one, just like Celsius. And so, it's tough. But here's the deal, okay? I always think it's tough in general, and yet they come in with these extraordinary numbers. Like, look at the growth rates of this company: 49%, 78%, 76%, 76%, 85%, 71%. Like, I keep myself thinking, like, there's no way they could keep growing at these sorts of growth rates, right? I look out there and I'm like, 40%, like 40. You got to understand, that's 40% growth coming off of a quarter last year where they grew revenue 76%. So it's like an insane comp, right? You grew 76%, and then if we went back to previous to that, we're at like a 26% number. So you're at like 26%, then 76%, and then you're expected to do a 40% number on top. Like, that's tough. I even myself, I look at that, but the bottom line is you can doubt this company and be like, nah, they can't hit that. They can't hit that number. And they do it. And then they do it, and they do it. The other thing to factor in regards to E.l.f. that is a very important thing here is E.l.f. gave a very lame, weak guidance at the beginning of this year. They did the same thing last year as well. And then about middle through the year, they upped all their estimates for the year. And they're like, oh, we were too conservative with our guidance. And they upped all their numbers. And that's always like one of the best things to happen to a stock is when you up your estimates. That could definitely be a possibility to happen here. Let's call it over... Probably with this week, there's a decent probability that they come in, they report their numbers, their beats, right? And then they start feeling better about the overall year and they up their 2024 estimates for this year, right? And all of a sudden, everybody's like, whoa, E.l.f. did it again. They came in with beats, they raised guidance again, A+, A+. Tarang does a heck of a job running this company. He understands the game of running a business on a super high level, and he understands the game of running a public company and, impressing Wall Street. You want to come through with beats on your numbers. You want to come through and have the raising of guidance throughout a year, right? Because it adds to the bullish momentum around a stock and it makes people love the stock, right? And you got to understand, special stocks do special things in the market. Special stocks do special things in the stock market, right? And I'll put it to you like this. Right now, the Olympics is going on, so there's like a top tier of athletes, right? And there's a few athletes like at the very top of each sport. And those athletes are usually very far superior versus like the next tier down and next tier down, right? And so, somebody like a Simone Biles, I mean, my gosh, like she's like the creme de la creme of the creme de la creme, right? And that's kind of like an E.l.f. stock. And just like special athletes do special things that you couldn't imagine doing, special stocks do special things, and they outperform not only the average stock considerably, but they even outperform the best of the best, right? So that's an E.l.f. on a shelf. We'll see what happens with numbers. 2 reminders before you guys take off here today. Once again, my Twitch channel, that will be pinned comment down there today. If you want to join me tomorrow for the live stream, the Palantir live stream, that's going to be a crazy one. I'm projecting 1,000 plus people on the live. It should be a big one, okay? Big one. And then in terms of, if you're looking to join my private group, get access to 1000X and apply for that, that will be linked in the description area down there, okay? All right, guys, much love as always, and have a great day.